Hi everyone, welcome back to the channel. Let's talk a bit about the currently most valued automaker on the planet, which is Tesla. If you are familiar with investing, especially when it comes to high-growth stocks, you should be familiar with the ARK Invest CEO, Cathie Wood. After a recent, more than 30% crash on Tesla shares price, Cathie has been buying Tesla dips caused by this month-lasting downtrend. She has been a well-known Tesla bull for years and has recently reassured the investors that she is still super confident when it comes to investing in the company. Just listen to what she said in an interview with CNBC, which was aired a little bit over 2 weeks back, before Tesla has dipped to as low as $540 in March 2021. To as low as $540 in March 2021.
How do you feel about Tesla's price now, and are you still adding to your position?
Yes, well, as you know, we report our trades every day, and you will see that we have been adding to Tesla. Our confidence in Tesla has grown as we've done research on what ride sharing potentially could add. It could limit the risk significantly. It's a much more profitable business than electric vehicles. And we do think, even though I think there's some debate at Tesla whether or not they should launch a human-driven ride-hailing network, it would be a very good bridge, we think, to their autonomous strategy, and we think they will decide to do that. I don't think anyone has in their models anything for ride sharing. And then as time goes on and we learn about their artificial intelligence expertise, the 30 billion miles they've collected of real-world driving data, no one comes close, not even, I think Google might be at 30 million compared to 30 billion. And we know that in the AI world, and autonomous is AI, that the company with the most data and the best quality data will win. So we're pretty excited about autonomous, and the probability of success in autonomous we believe is going up, and therefore our price target will probably follow at some point.
I think we can all agree that Tesla has been one of the biggest winners in recent years, benefiting incredibly from the switch to electric vehicles and autonomous technology. A more than decade later, after Tesla's initial $17 initial public offering price, the stock trades at around $700 after a 5-for-1 split which happened back in August 2020. They always say that the early bird gets the worm, and we can definitely picture Cathie Wood as the early bird in this scenario. Before Tesla was even profitable, she was already investing heavily in the company, and it has been one of the best moves in her investing career. Here is another interview with CNBC, which was aired more than 2 years ago, which proves how bullish Cathie Wood was on the company in the past.
You at ARK Invest have become very closely associated with one stock in particular, and that is Tesla, because you made a lot of waves by attaching a $4,000 price target to the shares at one point.
Yes.
This means that you are obviously very bullish on Tesla and you do hold it in the funds. Is that correct? And if so, is it just a buy and hold, hope it pans out for the next 20 or 25 years? Or is it something different in the way that you approach this particular holding in Tesla?
It is our largest position, but before I go into that, our conviction has increased in the last year or so. It's our largest position. It's down about 29% this year, and it's always been our largest position this year. And yet our fund is up 28%.
How is that? How does that happen?
Yes.
How does that happen?
It is because last year, when genomics was under assault because of reimbursement concerns and pricing concerns and so forth, we were leaning into those heavily. So you buy low, right? We were leaning into those. And so our second largest position, Invitae, which we think is one of the most important molecular diagnostic companies out there, riding down the cost curve of DNA sequencing, it's up 125%. It got as low as $5 last year. Today it's $18. So leaning into that has really paid off. And it's true with the entire genome sector. We're doing the same this year with Tesla, but our conviction level there is so high that it never left our top position.
How could it be so high? I mean, Tim, this is a stock that is, if you look at a chart of Tesla over the course of the year to date and the 1 year period, this has at best been a roller coaster ride. So, at worst been one that's trending lower.
But first of all, it's great to have you here, and congrats on the performance in the portfolio, because I think there's no question there's an active component to what you're doing, and I think I would like to invest alongside of that if I was an investor. With Tesla, I guess there's two questions. I think there's been some obvious issues in terms of performance and some obvious issues on the balance sheet, but that's my interpretation. It may not be yours. The first question I have is really just corporate governance risk, because I look at a company, leaving aside an SEC investigation that one might argue is overdone. I think it's a company where disclosure and consistency and the same standards I would hold to any company, somehow for this company, no one seems to hold them to it. And how do you approach corporate governance?
So we have a 6-point scoring system. All of them incorporate ESG in some way, shape, or form. First one is people management culture. Nothing bothered us about what Elon was tweeting or anything until funding secured, which once we found out that was not true, we said, okay, that's not good. And so we did ding Tesla for management when that happened.
Does that mean a higher discount rate? I mean, mechanically, what does that mean?
Yes, but you know what our target is. It's so
not going to really move.
No. But within a month and then 3 months, 2 of our other scores started soaring. One was we learned about their artificial intelligence chip. We saw the specs. And our analyst, James Wang, came from NVIDIA. That's what they're replacing. And he said, oh my goodness, and he's going to write something this Wednesday about it. This leapfrogs the competition. And they're at least 3, if not 4 years ahead of the competition. And then a few months later, execution went up when not only did they not lose in the third quarter $700 million, but they made, this is cash flow, $1.4 billion. So that was a miss in terms of consensus expectations of roughly $2 billion. That's what happens with exponential growth.
So Cathie, though, I mean, let's put this in perspective also. The stock is down for a reason, partly because there's a fear of a possible capital raise that has to happen down the line. They may have to issue more stock, raise more money, and that's going to dilute existing shareholders. Are you concerned about that aspect of Tesla, that they are burning through cash and that they need to raise more, and that could put pressure on the stock?
Well, I believe that's in the stock.
Or would you welcome that?
Exactly.
Is really a question I have, because what I wonder is why this is a company who has enormous cash burn and an enormous opportunity. This is the $1 trillion idea with $1 trillion worth of issues around it. And I would be out there raising money tomorrow. Can the company not raise money?
Sure. Oh, it can raise money. I don't think Elon wants to do it at this valuation. I think he thought, and the company thought, that their autonomy day last week was going to give them a nice opportunity, that once analysts understood how far ahead of the competition they are, whether it's Waymo or Cruise, in terms of autonomy, and how soon it is going to evolve, and that they would be able to raise. What happened last week came clear to me is the analysts following this stock don't know how to analyze it, because it's not a technology stock. It is that. It's not a car company. Yes, it is. Battery. It's utility. It's something for everyone, and no one can pull it all together. We have set out our research teams. We have broken them out not by sector, but by innovation platform. So we have a robotics, autonomous vehicles or robots. Energy storage, they will be electric. Artificial intelligence, they will be powered by artificial intelligence. Transportation as a service, we have 4 analysts collaborating on this. I don't think research departments out there are set up to analyze this stock. There is an amazing inefficiency in this stock. It is our highest conviction idea for a reason.
It is worth noting that the $4,000 price target was actually achieved way sooner than Cathie and ARK Invest analysts were expecting it. They were indeed improving the targets year by year, giving higher and higher future numbers. Cathie's first prediction of $4,000 pre-split price has come true in January 2021, when the stock's price touched the $800, which equals to $4,000 before 5-to-1 split. Tesla is definitely a great company with lots of upside ahead, considering the current market cap of around $700 billion. There should be a new price target coming up soon from Cathie and ARK Invest's analysts, and we can definitely expect bigger numbers that we have already seen. Thanks for checking out this video, and consider subscribing for more content.